Let's get going. It looks like everyone's giving it a miss today, doesn't it? It's like everyone's giving it a miss today, doesn't it? All right, Clive, can you see my mouse okay? Anybody? 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 Mute. Right. Oh, let's 2:15. It looks like we haven't got a lot of people coming on today. Did anyone see my the new USA brief? No. The room's an absolute morgue, isn't it? What I will do to get things kicked off, it's only 2 minutes. I'll use the AI briefs that I'd give. I've got this new document that we sent out in the Slack room this morning that I'm testing, and the USA brief. So this runs every day at roughly 12 o'clock, and it gives an update of what's happened in the morning with gold, FTSE, DAX, NASDAQ, DOW, S&P, economic events and news that's come out early, and more news that's coming out all the way through 12 o'clock before they open. And then it gives, so where do we go from here? Brief. And that focuses on oil, gold, and American markets. So it tells you what's happened with US crude, spot gold, FTSE, DAX 40, NAS, and Dow Jones, and S&P. And then gives you a really good detailed look of what the market thinks is going to happen, how it's going to be projected, and how it's all going to come off. I've got it referencing a lot of the things without actually doing anything. But what I will do, it's a derivative of the normal daily edge that we post every morning at 7:30, telling where the market's risk on, risk off, and goes through everything in detail as well. But more importantly, it gives you the levels of what's going to happen in the market today, and the watch outs and lookouts for where we're going to go. But what I'll do, I'll quickly play the AI briefing on the sell-off from the US markets. We'll just put that on there and we'll put it up. It's just less than 2 minutes, so have a little look and see what you think, if it's worth doing this, sending this out early onto YouTube, or whether we're going to do it or we're going to do it somewhere else. I'll play this.
Hello and welcome to The Explainer. Today we're breaking down a major global market sell-off. Yeah, that one sentence really nails the mood, right? But what does it actually mean for the markets? It all boils down to this thing called risk-off mode. Basically, investors are running for cover. So what keeps this all off? Okay, let's get into it. Well, it really starts with the US Federal Reserve. They kind of set the tone for everyone else. You know, just last week, hopes were super high for an interest rate cut coming in December. The odds were actually sitting at over 60%. Not bad, right? But then Fed officials started talking, and they basically poured cold water on all those hopes. And just like that, those odds plummeted. Now it's pretty much just a coin toss. This reversal sent some serious shockwaves through the markets, and it all started right on Wall Street. Both the S&P 500 and the Dow had their sharpest drops in over a month. Ouch. But it was the tech sector that really got hammered the hardest in all of this. And you can see here, the damage was pretty widespread. The NASDAQ really took a dive. And this wasn't just a US problem. London's FTSE 100 tumbled pretty hard too. So while the Fed was the main story, there were definitely other cracks starting to show. So you had missing US data, weak signals from China, and a policy surprise in the UK. All this uncertainty is hitting commodities too, creating a ton of turbulence, especially with oil. So oil prices are getting pulled in two different directions, future glut versus an immediate supply shock. And get this, even gold, which is usually a safe bet, couldn't seem to hold its ground. Okay, so with markets this on edge, what's everyone watching for next? It really comes down to corporate earnings, with a really close watch on tech giant Nvidia's report. Which leads us with the big question. Can strong earnings from just one company be enough to calm this market down?
Right, that's just a brief. It's some of the guys in the room said they've seen it this morning. That's not the same one as we run in the mornings. I'm just gonna have a wee look. So I don't know whether that is kind of worth running on a regular basis for the American session, whether we want to continue doing the open session. I'm not particularly sure. I'm just going to have a look. I'll show you where these for people who are watching on YouTube and seeing these for the first time. I'll show you where you can watch them. Let's get this thing on the road. So put it on here. Oh, HARKO Day Trading. Push this up. Here we are. Okay, so you'll see on here, I've got podcasts, which gives the daily updates every single day. If you full podcasts, if you want to see every morning, there is a 2-minute video every single morning giving you a heads up on exactly what's going on. And I've published them all. This one every week. Doesn't seem that people are that interested in having a daily video brief. So I'm going to give it to see what uptake we get at the weekend and comments. Then I might just drop this and do it. We do the daily edge, the Sunday edge, and the Sunday evening on the Magnificent Seven plus Bitcoin and Ethereum. I might just refer it to that because doing these 2-minute videos, and although they're only 2-minute videos, they do take quite a while to put together. And we don't seem to have a lot of interest in those videos. But I'll keep an eye on and see if we get an uptake. If we do get an uptake over the weekend, then I'll carry on Monday. Otherwise, I'm going to can it and we'll just do the video brief for our trading room and just leave it for the trading members. Doesn't seem like the YouTube guys want the brief, but it was worth having a go for a week. But I don't know. Is there anyone on? There isn't many people on YouTube today, so what I'm going to do today, I'm going to do a very short video because we haven't got a lot of people in. I said to people to potentially stay away today, and it's probably the right thing to actually do. You can always follow the markets down, but following the markets down can suddenly give you a whipsaw effect if you get a buy up. So if you look at gold, first of all, let's go and look at the American markets. The Dow, for the Dow gap, see if we can do that. Let's have a look, see if the Dow gap's worth having a go. So you can you can see the close here. Where are we at the close? Let's get the 5-minute bar up. There is a closing gap down here. We're under the daily low, which is an extreme gap, and then we've got the closing gap. The market was up this morning on the futures where the market closed yesterday. So anything I'm trading today, we're going to do 0.5%, just to let you know this afternoon, because the market is in a bit of a free fall at the moment. 248 pips away. That's on a 5-minute bar, which is also a 5-minute fractal. But we do not need a stop that big. That's the gap. 248. The gap that we will probably, the stop we're going to need, I think we're going to have to think about putting an ATR stop in that, and the ATR stop, the smallest stop's 87, so we can call that 90 pips. So we just put the fractal on, what can we put on here? We want a fracker break above here, but I would like to have the stops down here. The ideal target is 174 pips to the 174 target, but I think we're going to we'll probably put something small on here. The market could just come straight off, or the American market could just buy this up. I don't want to take the second 5-minute frac. So what we're going to do, we're going to do 135 pips as a stop, 135. And an open target right into the close. So looking for that 5-minute fracker to be broken now. I'm going to put that in there. And we'll add the limit into the close. I'm just going to do 0.5% on that. When the high probability gapping will be the down. Now I want to see the market's open now. I want to see if the market is going to run up or we're going to drop straight down. The market is coming down. I'll take this off. We weren't so cautious today. I'm not interested. The markets are down. We're not interested in shorting. Today is one of the days where maybe just do a bit of analysis. And do you know what we're going to do? We're going to put a very small amount on. We're going to put a quarter on here and walk away while and do some analysis on gold. I can get this market. There we go. I'll tell you what we want to do. We'll put an alert. Let's get an alert right in the middle of this confluence here. If the market does go up, then be ready with 135 pips down. Open target. Well, the open target can be 250. Can be 250 target on this one, kind of. I'm interested in see how gold is reacting on the 61% level. Sometimes you got to know when to walk away from a market and let it be before you come back and trade it. So what we're looking at in the day, let's come right out onto the our weekly charts. Let's get the weekly charts up on here. On gold. You can see we are really bullish. The market has turned down. It turned down low on the 27th of October, and then the market's been running off from that. It's now hesitating. Go down into the weekly, and you can see on the weekly here, we've got this support where the market absolutely took off. Now it's come back down, and we've got 1, 2, 3, 4 points here. And the area that I was interested in and never thought we'd see this today, but we have, coming down to the 61.8 fibble. So that's what this grey line is. If we zoom in, you can see this morning we took out this 4-hour support at 41s. And the next level is a bit of the BRN, there's 4,000 down at the 78.6. Now, I was hoping we'd see some movement down at this level on the daily Fibonacci retrace, some fib buyers, but it looks like the market's probably going to come down into this area, into the big round number. So it's way beyond what we're going to do today, live trading. But just for the guys in the room, yeah, I'm the guys on YouTube, of course. Be aware, 15-minute bar, guys. A 15-minute bar breaking and closing above the 9 EMA, regardless of where the 200 EMA lies at the moment, and this is an exceptional because the market is diving deep. It's an exceptional. Would be good for a 1-to-1, I think. So we can see the support here. We can see that we had some hesitation. Market, the candles getting smaller and smaller and smaller down into the fib. Everyone's waiting to see who's going to break first and start to dip into gold. Everyone will be doing the same thing as I'm doing here. We can see a supporting oblique line, and we can see it 78.6. This is of real interest, possibly worth hanging around for a little bit longer just to have a look. Alan 59. Alan 50. Is that Alan Matthews? Alan 59. Maybe, I don't know. We all have different handles on YouTube, don't we? So I don't know who's doing what to whom in the right names. Oh, Alan Huxley. Oh, hi, Al. How you doing? You saw it this morning. All right, someone does watch the YouTube videos. I just didn't know whether there any use whatsoever, because what I thought I would do was put the YouTube videos up and see what comments we got. And if we only got a few views and no interaction, then I would keep it all to my own room, the trading room, and not put it on YouTube, because it's a pin and it's not a pin in it. It just takes quite a bit of time for a very short video, and it's targeted at really serious traders, not people that want to be entertained, if you know what I mean, that are just browsing. And it's much easier to cheers, Roy. It's much easier to just put it into my own room, into Slack, and let the guys watch it internally than it is to upload it into YouTube, make sure it's politically correct and all the rest of the jargon, and then put it up there. And then when you put it up there, then no one watches it hardly. You think, well, that was a waste of flipping time, wasn't it? So I'll leave it this week. I'll leave it over the weekend and see if we get any more views. And if we don't get into at least 3-figure views on the videos, then we'll keep it private into the room. You can see here that the market is hesitating on that 61.8% fibble. So what we want to be able to see, let's move out and bring the candles up so we can see them a bit better. So let's assume we've got this market driving off here that isn't illustrated here, and you see a 15-minute bar that closes above the 9 EMA. That's what you want to see, and ideally you want to see it with a small wick at the top, like this, preferably. But that's okay, as long as the wick isn't longer than the body. If it's equidistant roughly, that's absolutely fine, but not longer than the body. So this here is what you want to be looking for when we're aware of that. You can see here the market is really hesitating. Look at the volume of traffic coming into the market. So the ATR is really moving up on a 5-minute basis, but we don't want a 5-minute basis shout out, because what we do not want to see, I've got my pen, we don't want to see is a market giving it a rundown on a 5-minute like so, a wee pullback, and then us trying to get in, and then a market coming all the way down for its next level. And that could so easily happen. So rather than using 5 minutes, today we should be using 15 minutes. To get to the 5 minutes, it will start looking a bit buoyant. Look at that. Right, just shows this market is absolutely littered, and it's not a bad thing either, with Fibbo guys and girls. There's the Fibbo, there's the 61.8. People are trying to get trigger happy and buy the dip. Might work, but be careful. And I'm going to wait for the market to tell me on 15 minutes that there is sufficient momentum to go to the top side. So that's gold. I did take a cheeky trade on crude today after it went back up. Oops, that's stacks. I'm running too many things at the moment. We're going pretty slowly. While we're on the DAX, you can see here that we're right on the 78.6 Fibbo, where the initial rejection here on the 4-hour bar, get down to the 15 minutes. And again, on the extended DAX, we've got a 78.6 rejection level around here. We do know from this morning that the DAX, when you get a deep dive, a deep sell-off, you usually get into a key level. You nearly always see at least a 50%, if not 100% retrace on a deep dive. So really, I would like to see this to come down to S3 and see if we get a 50% retrace on a 4-hour candle. But it's not there yet. If we get a 15-minute bar, then that's fine. We had an order in here to trade this up, but cancel that order. Market's just dropping off. Really, a 15-minute bar from lower would be really, really nice, or a test back up to Camarilla breakout short, and a 15-minute bar breaking above the cam level would be good. Crude. We are moving slow. I'm running some bots and codes in the background as well, which is all right, not running particularly well. So it's making this run slow. So this is the bar I took this morning, just below here, and the market started to go in our favor. That just then went back up again. and then I am ordering at the 61.8 fibble, and then I took the money in the market. Where did I take the money? That's 5954. So I took the money into here. So crude should be coming off. It's a battle with crude, back and forth, back and forth. Did asking the guys, so who's on YouTube? Rory, for instance, have you seen the new revised US brief? I put it into here. So I did a US brief here at 1:30, and then at 10 to 2, I did the revised one, which tells you and predicts what's going to happen in the futures this afternoon. Don't know if anyone looked at that. Don't know if you looked at that video. Everyone's a bit quiet. Yes, seen it. Do you think it's worth doing it? I need to top and till it, of course, but all the raw data is there from my robot, AGI robot, and just dumped it into a Word document. And whether the links still work? Yes, they do. Right, yeah, it all works. I just yes, you like it, right? I might do. I'll start doing a US brief document then, with a drag and drop from the AGI, which is all the raw data, which gives you another from 7 o'clock in the morning, 7:30 in the morning, all the way through to lunchtime, a heads up of exactly what's going on in the markets and updates on as well as the Northern European markets. It just gives you heads up as well on the American session and exactly the day, the dates and all the analyst views all collected together. And then I'll leave all this in as well, extra reading as well to have a look. Nothing goes in the report unless it's been validated by at least 2 independent sources, ideally 3 from 160 different websites and data feeds, including Bloomberg, Reuters, as you can see, and Market Watch. And it's pretty comprehensive, very wordy, but for a trader who wants to get the edge, hence the daily edge, which incidentally, the daily edge is, the daily edge, where's the daily edge? You can get the daily edge if you, quite interestingly here, the daily edge is donk. Where's the website? Daily edge. Yeah, you can get the daily edge, and at the moment, up until tonight, the daily edge is just £10 per month. And you can get it £10 a month. From Saturday, in other words, from midnight tonight, it's going to go up to £15 a month. However, if you subscribe before midnight tonight, your subscription will stay at £10 forever. This is just to make sure the first 50 so guys that have all joined get a loyalty bonus. I'm going to a limit on the number of people, so if people want to get hold of the daily edge before midnight tonight, that's about as much advertising as I'm going to do, and you'll get the £10 discount. Not £10 discount. You'll get the discounted subscription, and after that it goes up 50%. Still hardly anything. £15 a month for 20 odd well, 24 reports a month minimum. And they've never failed to update people and put people on the right track since April, since it started. It's we've had one little day where there's been a hiccup, and I just resubscribed yesterday. Again, all right, okay, well, I got. Thank you very much. You have secured your £10 forever, and it's going to go up to 15, and then next year it will be going up again. We're putting lots more data into it, and well, it just gives you the edge in the market. It's absolutely mental if you don't. I put an awful lot of work into this and do an awful lot of AI and AGI work to deliver this information. It takes 2 hours every single morning. It's absolutely spot on. I've actually been giving free samples out this week to some of the guys on my subscription. We've got 17,000 guys that are subscribed onto my channel, and there's only about 1,000 of them, about 2,000 of them that have downloaded decent information rather than just freeloading, downloaded key stuff like the 15-minute bar guide, which is totally free. It tells me people are really, really interested. So I'll probably be emailing all those people that have already downloaded the free stuff, free 15-minute bar guide and everything, which is under here. And they will get the opportunity to get hold of it on the next wave. All right, thanks, Son. You wouldn't be without. That's what I want to hear. Yeah, that's what I want to hear. Great. Well, thanks for the support. It is very, very good and very accurate. Right. So, 15-minute bar on here would be something that I would trade again today. I'm going to do it a very, very short session. This session, we've not got a lot of people coming onto the session, probably because the market's crashed now. Probably told everyone to stay away, really. So we'll see. So let's look at the S&P. What's the S&P done? Oh, all right, okay. Let's zoom out again. The S&P. The NASDAQ's at a very interesting point at the moment. We'll look at that technically. On the 4-hour, may look at that on bounce volume. We're a 926 cross and some OBV coming in there. So we actually, let's get into the detail a little bit on this. Is the market, it looks like it's bouncing off this 4-hour support line, and people are looking to buy in there. Is there a 15-minute bar that we could have a look at? Oh, yes, there we go. So we do have a trade. We trade back in 9 minutes time. We do have a trade on. There's a huge buy. Look at the volume. Absolutely rattling up. We've got 9 minutes to go. Let's see some look what's happening to gold then. As gold decided to get on board as well. That's looking a bit tasty on gold. Big indecision bar. Bit of positivity, indecision, right after 61.8. So I'm going to hang around for this trade, and then that will do. We've got 8 minutes to go before we can get hooked up on that. So I wouldn't take a preemptive strike. You might be lucky, but that would be what I would call a Clint Eastwood trade. you're feeling lucky, punk. You need to let the market tell you, don't guess. Sometimes you might miss a trade doing that, but you know, you're better off keeping your rupees in your pocket than spreading them around the charts. Right. The Dow. A rise above CBOS. That's in an interesting position as well. Do we have a rise above CBOS we can get for closing this gap? Because it is a market that does like to close its gap. 158 pips. Do it for a 5-minute fracker. Which one is going to settle? You see here, this is a fractal break here, and there's a fractal about to set up here. Oops. I need to close a few applications. I'm running some back testing on some robots at the moment. That's why the market's going slow. It's an i9 Mac with lots and lots of memory stuff. Even it's struggling to run everything. We could end up, the markets all seem to have just gone and stopped, going low. But unbalanced volume positive as well. And here. Hopefully by this weekend they'll have the AI desktop tool for telling you all the daily pivots and all the indices as well. And then might not be Sunday, but be not many days afterwards, there'll be an app for your phone you better get from the Google Store or the app or the Apple Store onto your phones, press the buttons, and it will give you the latest levels on all the major indices, which will be quite cool. It'll give you the CAM levels as well. Not only the index levels, all the CAM levels. Yeah, still, let's put some alerts on there. See a fractal drawing up there now. US 500 and gold, kind of interested. Oh, flipping heck, look at the market coming on here now. 4 minutes to go and it's really getting a wiggle on. There's a power in that there. What I think I'm going to do, I'm going to take a 15-minute bar, a break on, like we do in the morning. Sometimes take a 5-minute bar, break up. I'm going to use, rather than 15-minute bar reversal, I think I'm going to use a 15-minute bar break. What I mean by that is we're going to have a break of the bar, and our stop is going to be right under the bottom of that bar. Will be 2 pips below the bottom of that bar. And we're going to head for the close and even a little bit higher into here. It's showing a lot of volume in there. The market is immediately on the 15-minute bar accepted the price. Oh, will you bloody get off? So market is, I'm sorry, it's going too slow for me, the reaction chart there, the reactions. So we're 3 minutes away what's gold looking like? As gold took off like a scalded rat as well. I think I'm going to take a 15-minute bar reversal on that. I'm not sure I'm going to necessarily want to see a break above that. To give us an extra wiggle, I'm going to do a 1 pip break above that bar. Yeah, we'll come off some very key levels on the S&P and on gold. So we can use a 15-minute bar as a confirmation rather than a 15-minute bar reversal. Now, things, so on this little camera breakout short with all the way, it's down, is here. So I've got a cam level here. I don't often show these and put these up, but I flip them on and off now and again to have a little look, see what's going on. So this shows on effectively 24-hour markets. It's showing you where the key R3 pivot lines, daily pivot lines, and daily cam levels are in the market. I'll switch this off now. Right. So once we get above this level, then we're ready to go. Got 58 seconds to go. The top's here. 25, 20, 27 pips. 27 and 27, guys, and a direct break of this bar, a 1 pip break above this bar, I should say. And we'll be ready to go. I might just have to press the button straight away in 38 seconds. Actually, it's 28 pips now, 28, 29 pips is calculating on the fly. It's a direct break of this bar in 20-odd seconds. Was it any further? I might just stick it to 30 just to give us some wiggle in case it doesn't move up a wee bit. We've got 7 seconds to go. Don't remember to smash that button. Just got enough time to whack it in there. There we are. Top of that button is 84.3, 85.3, 85.4. Just be pedantic. 1 pip. There we go. And then we're away there. And I would look to get a lot higher than that. S&P candle will be ready as well. So you can trade the S&P in exactly the same way. Measure that. Don't wait for me to press the button. 33, 30, 35 pips. 35 pips. 35 and 35. Well, that gives us a 2% on gold, of course, 1% on here. That should give us just, make sure we're getting that right. We want half the spread on that. So the higher that is 705.75, 706.75. So that needs to be 2.5. Just being pedantic with the numbers. So we're looking for a full bar, a full trade of the 15-minute bar replicated to the top. The issue we've got, of course, here is isn't quite a 1-to-1, but with the way the market is running, we do have a bit of an overrun there from a previous market, a previous attempt to go long right in the middle of that confluence. Could be good. So we've actually got some market actually moving now. And I think the S&P and the S&P and gold are good enough just to do the S&P and gold. If we get 2% out of gold and 1% out of the S&P today, then we won't go wrong. Putting gold in the S&P with me. So this looking wouldn't be without the daily edge grade. Takes a lot putting together, and easily you'll dismissed in a few minutes reading. Hi Pep, how you doing, man? Just get this pop. Just have a look at the other screen and see what's going on. All this just waiting to pop as well. Shoot, seems to have gone into error. Something went wrong. What is it bloody wrong on? Can you see? Not very useful at all. Mm. About that initial interest, and it's just quieting down, hasn't it? All right, excuse me. Sorry, guys. Let's push them here, isn't it? We're about to be triggered, I think. About to be triggered. There we are. It's about the DOW. What about it? So we can have a little, so look at the FTSE, then we'll have a look on and look at the DOW. Actually, this 15-minute buy is going to be closing above the 9 AM, isn't it? Let's go and have a look at that dance. See if it's got the Friday feeling. Oh, yeah, it's coming. Thanks for the heads up. Why did you say it was breaking CBOS? Right, 15-minute bar. Well, there's only so many you can take, isn't there? You know, we're trying to stay on our training accounts in the room, and we're already leaving up 2% at risk. If you haven't taken all the trades, then and you've got size in your account to be able to trade, we're breaking back above CBOS. We've had a move into a key level, 78.6, and we already traded this morning and made our 1%. We've already closed the gap this morning, but there's no reason why this market can't come up towards 2100 levels today. No reason at all. The DAX does have a propensity. I can't say that word. I'm going to keep trying until I get it right. To do a nice retrace on a Friday. What's the FTSE doing? Well, the FTSE's nailed the gap from the 24th of the 10th of November. And it's coming down to 4th of November. It's within 2 pips. That is near enough the gap closed. And got that right off the 200 EMA. With a reversal, smack off the 200 EMA. Again, come down to some key levels. These are 4-hour levels and key gap levels to close. So it's your choice, really. There was a 15-minute bar there. Did anyone take that 15-minute bar? Any of the guys in the room? No? I've missed it because I'm waffling away, of course. But yeah, nice 15-minute bar there as well. But we don't want to be over leveraged, whether you're English or American. I'm going to see if I can open up the YouTube stream again. Doesn't seem to want to work properly. Anyway, so I can actually, I've got another screen open on a computer down here, so I can actually see. But we don't seem to be YouTube on the go live is not giving me the window. The live button. No, something went wrong, it says. Oh well. So there is a 15-minute bar then. You can't take them all. That was the 15-minute bar. If you took the 15-minute bar, then well done you. Stopping that swing low. Do you know what? These hindsight entries are always the best, aren't they? Look at that. You'd nearly beat the full target now. Just so happens we didn't choose that one. And that's trading for him. We're in gold and the US 500. And the Dow. I wonder if the Dow's took off yet. Where the Dow is working on. So we're still waiting for gold to pop. It's, yeah, still waiting for gold to pop. US 500 is 16 points down. So that 15-minute bar has been retraced. There is a theory, there is, well, a practice on that using a 15-minute bar, not reversal, but a 15-minute bar to trade in, is that you take half on a break and you add at 61.8% Fibon. So we do the Fibonacci on the bar. The idea is you add to it on the 61.8% Fib. There, if you can get it. So you put half in, then add the other half on a 15-minute bar. Now, I don't know whether it had gone all the way down there. You can't tell. No, it hasn't gone all the way down to there yet. But you take a direct break of that 0.5% and you put another 0.5% in there. Just sometimes these high tests do retrace. Let's go that down. It's just down in the doldrums, isn't it? So the FTSE's moving off nice. The DAX is starting to move, but we don't want to spread our risk everywhere. And the assets we've chosen. Oh, I'll always keep saying about the NAS, then I'll put the NAS on. And then technical before we disappear. If we zoom right out in the NASDAQ, oh, we just get rid of these levels for the moment and make it a bit cleaner. You can see that the market having dropped and it then got itself into a nice weekly channel. And these are the 4-hour resistance levels. And we're right in the intersection here on the NASDAQ. Now, if we break this, and I think the market could easily come down and test 2400s, not 24.5s, 2400s easily. So it's a very interesting position we're in at the moment. We zoom a bit further into the daily, you can see we've got some more support lines on the daily and 4 hours. Let's get into the 4 hours, which is the time scale we use for trading, for day trader. And you can see all the different support lines are all fanning open here. So this is a key, put this line in here, a big fat red line so you can see. This line here is pretty important. If we get a closing bar below this support line, body and wick, a 30-minute bar, body and wick, and then a direct break of it. So in other words, if you, where's my pen? If you see a bar, the closing, body and wick under this 4-hour level here, and then you see another bar, so body and wick, and then a further bar start to trade below that level, a direct break here, then on a 30-minute time frame, on indices generally accepted, that the price has been accepted under this key level, and therefore the market's probably going to go a little bit further down, heading towards 2400 levels, or at least into these levels here. So watch out for that. But it looks like it is rejected in this area. Now, if I go into the detail of the area, I drew these things in this morning. This is the area that I said would be of interest. I drew a bit of an oval into here. Market come down a little bit lower into the 4-hour resistance for the BRN test, big round number. You'll see that in the daily edge all the time, referencing BRNs. And the market's moving off on here. So the markets took a big hit in the Max 7 essentially. Am I interested in trading that? No, it's a Wild West at the moment. I'm going to take a final look at gold, and then I'm going to call it for today. We're long on the US 500, looking for 1% on that. And we're kind of looking really for this market to come back and test CBOS there. So try and extend that to 41.30 would be a nice trade if we can get triggered in. But again, it's all about being patient. Is it anybody got any questions before I actually sign off and go? No? If you are watching on YouTube and you don't have a subscription to the Daily Edge, today's your chance to get it to £10 a month and have it stick at £10 a month and not go up. After that, it'll be a little bit more. And so in my view, but got to be worth giving it a try. All it's going to do at the worst is give you a heads up of exactly what's happened in the markets, all the market intelligence, all the economics, and what's going to happen from a geopolitical and economic perspective. And then overlaid on that, it's going to tell you all the high probability setups for the day. So if you are a trader, it kind of doesn't get any better than that, apart from maybe having someone professional trade for you. I don't know. So if there's no more questions, I'm going to say ta-ra, guys, and have a great weekend. And we'll see everyone in the trading room, bright eye and bushy tail, on Monday. See you guys. Bye-bye.